Singapore unveils 1.5 billion Singapore dollars package to ease inflation burden. Sign up for the New Economy Daily publication. Follow us at Economics and enroll in our podcast. Singapore introduced a $1.5 billion $1.1 billion package deal to protect lower-income households from surging fees of dwelling, joining monetary policymakers globally in tackling charge pressures that look set to persist. The bundle, comprising voucher payments and household utilities credit, is targeted at imparting comfort to the maximum inclined businesses, Finance Minister Lawrence Wong said at a briefing for local media on Tuesday, in step with CNA. It also includes help to nearby corporations by means of way of multiplied wage credit and steps to aid jobs. Singapore isn't by myself in ramping up aid in Asia, where government have particularly centered on checking sharp profits in meals fees. Malaysia and Indonesia have resorted to export bans on commodities like palm oil and chook to keep nearby costs in test, while Thailand recently prolonged charge caps for critical items and mooted a profit-sharing association with power corporations to fund a gasoline subsidy program. Singapore, the trade-reliant enterprise hub, has been particularly susceptible to food and power rate surges resulting from COVID-induced delivery bottlenecks and Russia's war in Ukraine. The center inflation print for May, to be introduced Thursday, is predicted to surge further from a decade-high 3% in April, according to a survey. In February's finances, Wong announced the USA's 0.33 directly price range deficit, allowing the government to hold the spending taps open to aid the economy's restoration from the COVID shock. Officials count on the entire draw on Singapore's reserves for pandemic aid to quantity to 42 Singapore dollars, $9 billion, $9 billion over 3 economic years. The city-state's important bank expects core inflation to surge similarly over coming months, with its modern forecast predicting center figures to common among 2.5 to 3.5% this year. All items charge rises are seen between 4.5 to 5%. The Monetary Authority of Singapore, which seeks to dampen imported inflation via adjusting the country's forex settings in opposition to a basket of its top trading companions, have opted to tighten financial coverage 3 times within the closing 8 months, along with a Marvel move in January. Copyright 2022 LP.